But this also, like, if you haven't, anybody considering Macy program? Macy program, anybody considering Macy program? Most of the Macy program is in here. So in a way, if you're interested in Macy program, talk to me a little bit more. I teach in the Macy program. In a way, I learned all this programming because I've been teaching in the Macy program, and I was one of the people who started a specific class there. So I've learned all the programming. So I'm also like deploying that, like here, like so. But we're still going to use Blackboard for all the administrative stuff, like grades, announcements, all these type of things. And if you notice, this system is a lot more, it's kind of like a website. Like you can download, you can like, I'm going to embed videos in there, so you have like text and then video next to it, like downloads, whatever. So anyway, what else? So what I wanted to go over next is, and I think you guys are going to like this. We just experimented also in the other class of working with this. This is going to be more, I want you guys to be spending more time in the class working together on these spreadsheets. And you'll see that today in a way, like you're going to be spending more time together going through spreadsheets rather than hearing me talk. And I'm going to be walking around showing you guys how to use the spreadsheet. So next time, please bring your tablet or computer or phone or something. So what I wanted to go through first, guys, today is translation one more time. And what I wanted to do is add to what we talked about in the translation before to another step in the process. So in translation, I have an example problem here that you should hopefully have. It's basically right under that spreadsheet, there's a link to download this. So I want you guys to take a look at this. Basically what this is a way of translating the entire financial statement. And this is part of the translation that we talked about. We kind of talked about terms before, but now the actual goal of translation is to take all the debits and credits on a trial balance and convert it to US dollar. Right? So this is basically the audit process for including a foreign subsidiary in the US financial statements. You know, in a way, as part of the situation, you would get a euro-dollar trial balance, and this euro-dollar trial balance, you'd be asked to be like, listen, what is the two things I need you to do is, first, convert these things to USD, and then find out the remeasurement gain or loss. So that's the task that you are given. And the way, and there are two things I wanted to say about this. In the book, as we have on chapter 10 now, there is a 7-8 page process where they go through explaining that by reformulating the entire financial statement. So that's one way of doing it. But I looked at some other books, and this basically I grabbed loosely based on actually the AICPA's recommendation for what to study for the CPA exam. And this thing right here actually summarizes this whole topic in a really, really simple way. Because all you're doing, if you open up that spreadsheet, you notice that the debits and credits on the European side balance at 920. You have a sum of 920, so it balances. Then you apply the different rates to it. As you see, all I'm doing here is multiplying by each different rate. And then when I sum these, I'm basically getting an imbalance. So I'm getting an imbalance now because I summed up all the USD and it doesn't sum up anymore. So a question, and I'm trying to stay curious with this, and I'm just wondering, why do I have a difference here? Anybody have any idea? Exactly. Perfect. We get gains and losses in the currency by translating it, right? Not only am I applying some ratio to the balance numbers, I'm actually applying a whole bunch of different rates. I'm applying a whole bunch of different, of course it's not going to balance because like I changed every number around by like a random, like, you know, in a ratio. Of course it's not going to balance. But the idea is, and I think this is really cool, and this is also the way auditors approach accounting. The audit approach to accounting is really funny actually, is always to find a difference between A and B, regardless of what you're looking at. So in a way, as an auditor would approach it, you said, okay, so I calculated things out and I have a difference. 41. And then the auditor always identifies the difference, quantifies it, and then conceptually rectifies it. So I have 41, so now my question is, okay, so 41, that's the difference. Now my question is, well, what does that represent? So Miles is saying, just from like a conceptual analysis of the situation, forget the numbers for a second, just looking at the fact that I took a perfect trial balance and I multiplied everything by a random number, of course the rates changed. So now, using that sort of like intuitive or whatever knowledge from the chapter, I'm saying I have the number and I have the issue. I have the number change, it's 41, and the issue, that is the remeasurement gain or loss. Now the question is it gain or loss, first of all? Is it up or down? And second of all, is there anything else going on, or are we done? So it's a loss because it's a debit. It's a loss because it's a debit, so that's 41. And then the second thing is, yeah, because if I put the 41 back in, my trial balance balances. Look, I put the 41, 932 less 80, 891 is 41. 41 plus 891 is 932. And I have 932 versus 932, and I have a difference of 0 now. So my trial balance is back in balance. So in a way, I plugged the 41 in such a way that I basically skewed my whole trial balance using the rates. And then I rebalanced the trial balance using a plug, which is an adjustment for the translation loss. So in a way, I was able to come up with the translation loss simply by understanding the difference that the trial balance now embodies by applying the rates, right? So far so good, right? It's a pretty stable work paper here. The only question I would have if I was reviewing this as an auditor is I would question these rates. Be like, are you applying the right? I have two questions actually about the rates. Are you applying the right rates to the right accounts? And are these rates even correct? So this kind of goes back to what we discussed last time, and I know a lot of people were talking to me about office hours yesterday, is sort of coming from that blue chart of this is current, this is historical, this is average, this is that. Like, how do you know which one is which, and when do you use which one, like which one do you use when? So, okay, so in this situation, you're at a different level here. You already have a trial balance and you're applying all these things. So you have to sort of now go back and figure out what method we're using here and why. So what method are we using here? Anybody know? Current, temporal, everybody agree? Current? So if we're using okay, so what's the main distinction between the current method and the temporal method is that in the current method we're only using the current rate primarily, right? So here we're using the 0.9 is the historical rate. So we're using temporal here. And this is what we're doing here in a way, like we're translating all of this. And since we're using the temporal method, for short-term assets, what kind of rate do we use? Yeah. Current. Yeah. Current. And for longer dated assets, what kind of method do we use? Historical. Yeah. Land, buildings, it's historical. We're assuming, that's a great question. Sandra is asking, why are we using the temporal method if the currency is in euro? Great question. The idea is that the foreign currencies are always going to be foreign, but the question is what's the functional currency, right? And I'm saying, like, in a way, if we're using temporal, the functional currency must be USD. But because the functional currency is USD, like, the trial balance will still be in foreign currency. Like, the trial balance, even if the foreign currency is, the functional currency is like the parent's country, like USD, since we're in Europe, our trial balance would technically be in euros. So I'm saying that, hey, these guys primarily do business actually in the US or whatever. But they're located in Europe with a European ledger. It's a really good distinction. Basically, this would go debit, OCI, loss, remeasurement loss in OCI, and debit would be, yeah, the credit would be, I'm trying to think because it's basically just a loss. So you would have that, and it would be somehow it would just reduce our equity. So it would just be an equity reduction via that expense. It just recorded translation expense loss. So what I wanted to do now is basically as an exercise to figure out what is current, what is historical, what is composite, what is average, right? To go through the spreadsheet, guys, in your group, please, go through the spreadsheet in your group and basically work through this column, figure out which one is which here, right? Figure out which one is which. I'm saying by the nature of the account that you're dealing with. And then replace the rates based on what the exercise says here. This is the practice exercise. You basically update the rates according to these new rates to figure out the new translation loss. Okay? So this is a practice exercise for right now in workshop, guys. And, approach it with a playful, explorative attitude. Just to be curious about what's going on there. You don't have to get it right. You don't have to get it right now. But if you just stay curious with it within your team and try to update these numbers and see what's going on. I was just telling the other class, I was just reading about like some scientific research about learning. This professor somewhere out there did a lot of research on learning, and he said I was actually really curious. I was he said basically no learning ever occurs or can really occur in a stressful environment or in an anxious environment. He's saying it's like a hypothesis. This is science. He's saying actually he believes learning can't really happen because our nervous system it's more in survival mode than learning mode. So he was saying to test that he put this amazing computer in a random building block in India. They're kind of hidden but not, to see what's going to happen, who's going to play with it. So these kids end up finding this computer. It's a really sophisticated computer, and they were just tracking them to see what they're doing. And in a few weeks the kids figured out how to use the computer, typing and chatting and connecting on apps, and it's kids from the slums. And they saw basically that in a few weeks of just hanging out, they taught each other to do more than people go through it courses and studying and homeworks and all these things, by just because they were curious about the thing. Like, and in a way, he was saying, like, if you go through something in a curious way, somehow people can just pick things up quickly, rather than sort of a rigorous sort of go through it and get it right and submit it by tomorrow. It's like a different... Anyway, so try this out. I'm going to walk around and basically show you how to change the formulas. I'll sort of work with you. Over with you guys. I wanted to go over the spreadsheet with you guys of what's going on here. I saw you guys, I was walking around and I saw most of you, I mean, I think all of you actually, like really getting super, like really deep into this and working through it in a really, really detailed way, and you're coming up with a lot of interesting questions too. So I just wanted to go over a couple of things. One thing I do want to note, I'll discuss this in a minute, this whole thing here, but just understanding a couple of things of how we go through this. And as these numbers are changing, I'm sure you're able to see a different translation loss, right? And I think one takeaway here is understanding that when you have a shift in rates, like we had a shift in rates and we realized the loss, it's because even though like we're getting less dollars here, so you could see that we actually have less assets in a way. And in a way, when we have less assets, like we also have less liabilities. So it's like our assets are becoming less because the rate went down or whatever. And the liabilities are also becoming less, so we're winning on the liability side, but we're losing on the asset side. And since we have more assets than liabilities, we lost more than we gained. In a way, I wanted you guys through this exercise to, like at the second layer of this, if you really can get to that place, is understanding that when you revalue based on a rate change and your assets decrease, I mean, you literally see that the cash was less. Wasn't cash a little bit more before? Now it's like, I think it went to 66 instead of 67. So you literally seeing, I mean, that's a dollar loss right there. That's a remeasurement loss of $1. You know, that's a microcosm of the macrocosm of every account. In a way, what I'm asking you to do is figure out what is that dollar on each and every single account, and then to tell me what is that on a whole level. And in a way, that's 41 or whatever you guys got from doing the change. That's the macrocosm. But the idea is, on a conceptual level, why is it even a loss? Because I would argue, sure, I'm getting less assets, but aren't my liabilities getting cheaper too? Because I'm devaluing my liabilities as I'm doing this as well? True, but I have more assets than liabilities. And in a way, the remeasurement, if you start looking at what is it that we're actually doing, we're shrinking my assets, right? And we're shrinking my liabilities. And the net between that is the remeasurement loss. Because I shifted everything around. The question is, how did that end up affecting me? And that was 41 or whatever you guys got for the second one, right? Any takeaways, guys? Anybody want to share their experience of what it was like to go work with the spreadsheet? Anybody have any interesting takeaways? Yeah. Wonderful. Much clearer. Wonderful. That's great. Yeah, over there. Oh, well, this is the issue here. There's a mistake here I made that, and I'll explain this. What happened is that we always work with revenue and expenses using the average rate. But in the temporal method, like Aiden in the last class, I really knew this. He called me out. It's like it's supposed to be historical when you use the temporal method. So I made I made an error. So this is, in a way, the correct answer is that it's historical. It's not the average. It's This is don't use the average rate. So for this question, it's the correct thing is to use historical. And in a way, the way you use historical for revenues and expenses, I'll give you guys an example. With some hedge funds that I used to audit, and they would transact in Europe. Every transaction that occurred in Europe, since we were a USD firm, We would go into that date. We would get the proceed amount. They sold this much in Spain. We would get the FX rate that date, the closing Euro-USD rate, and we would translate the Spanish proceed into USD. And we used to just go through the, well, we didn't do the whole, like 30,000 of them. We would test it on a random sample basis. We would select a sample of 60 out of 10,000, and the audit risk methodology says that if you get 60 in a row that's correct, statistically, you can assume that the whole population is correct. If you encounter an error, then you test 60 more. And then, depending on how many errors you encounter, statistically, you keep selecting, but usually all 60 is right. You know what I mean? But keep in mind that in the accounting system, in the ledger perspective, I could technically, while I'm transacting in Europe, and I've done this actually, like in our trading system at the hedge fund, we would go in and record the transaction in euro, and we would have the FX rate from that date, and the ledger would be comprised of 360 FX rates, of course, for every day. And then you're in the AIS world. Then welcome to the AIS world of systems and databases and reconciliations and all those things. But in a way, like, we're trying to keep it simple. I want to keep it really simple for this exercise. And I wanted to say to you guys, this is basically assume that it's one historical rate, that we just 1.1 in a way is just the historic rate. But I want to make a distinction and say that land and building is historic from the purchase date. So that was like, we purchased that like 2 years ago, and that's the rate. As opposed to the historic rate for income statement accounts is of course from the date that the transaction happened, which of course happened this year. So we're going to go over homework now. And let's see here. So we have here Westmore Ltd is a British subsidiary of a U.S. company. Westmore's functional currency is the pound. The following exchange rates were in effect during 2013. Westmore reported sales of 1.5 million during 2013. What amount would have been included for the subsidiary in calculating consolidated sales? So here we have a situation where the functional currency is local. So in this environment, we use the current method. And in the current method, we use for income statement accounts, including sales, we use the weighted average rate for the year. And you'll notice all throughout the homework, it's like we're going to continue using weighted average for income statement accounts. So the answer here is 2,385,000. It's just 1.5 million times 1.59. And the answer is C. Now moving on to 10, we have Dare & Co. was formed on January 1, 2013 as a wholly owned foreign subsidiary of a U.S. corporation. Daren's functional currency was the stickle, and the following transactions and events occurred during 2013. So Daren issued common stock for 1 million stickles, then Daren paid dividends of 20,000, and then Daren reported net income of 80,000 stickles for the year. So what's going on here? What was the amount of the translation adjustment for 2013? So the situation is here now saying that what you want to do is revalue. And then also I want to make a distinction that it should really be one stickle worth 0.48. And one stickle equals $0.48. And one stickle equals $0.42. This is not correct. The way they have it flipped here, in a way, like, I'm glad Aiden, such a smart kid, figured this out, because I never sat well with this question. I always went through it already 10 times, and I always knew the answer is correct and everything's correct, but something always, and the rate is flipped. It should really be one stickle, because we have 1,000,000 stickles equals $0.48 or $0.42. Makes more sense. So if you look at it that way, 1,000,000 stickles would be worth $480,000 in the beginning of the year, right? So in the beginning of the year, if you remeasured in the beginning of the year, you would get $480,000, right? But at the end of the year, you get $420,000 by just remeasuring. So you have a $60,000 loss because you went from 480 to 420. You basically, the capital decreased on you. And it's interesting how it shows up. How would it show up in a trial balance environment, we were talking yesterday, is if you're using the current method, right? If you're using the current method, what happens when you issue equity in the beginning of the year? You get cash of 1,000,000 and you get equity of 1,000,000. It's a nice song. You get cash from there, you get equity for 1,000,000, right? So the cash stays with you and moves at the current rate, right? The cash moves at the current rate. So cash used to be 480, is now 420, right? That's a debit on the trial balance, no? 420. The equity was 1,000,000 and gets translated at what rate? Historical, which is when we issued, which was 0.48. So when you translate the equity, you would translate it at 0.48, and you would get 480. So you get from cash 420, cash is 420, equity 480. Trial balance doesn't balance. What's going to make it balance? On 60,000 on which side? On the asset side, which is in the expense world, the asset side is a loss. So you would have a 60,000 now. And in a way, if you guys sort of visualize that or conceptualize that, this is kind of where I'm trying to get to, is the reason we're capturing these losses is because of these discrepancies that we're finding. But I mean, there's also this shortcut. You could also use this shortcut, which they did here. You could simply just look at the difference and multiply by 0.06. You still get 60. And then for the dividend, you get 0.42 minus 0.46 times 0.04 is equal to 800. So the right answer is 60,800. The right answer is B. And then we had the same exact question, basically, in 11. If you didn't get 10, this is another shot. Basically, we're talking about a subsidiary here's local currency is the functional currency. So what method are we going to use? We use the current method. In a way here, we have a situation where the local currency is the functional currency, so we're using the current method. And we get 6. I don't know if this one was on the homework or the next one, but I just wanted to, it's the same question, it's the same numbers, The US dollar, then we use the temporal method. Use the temporal method, and luckily there's no income accounts here, so we don't have to deal. But what is the idea with using the temporal method here? Is that it's forcing us to, for the longer dated assets like prepaid insurance and goodwill, it's forcing us to use historical rates. and take this in. And for the shorter term assets, it's having us use the current rate and use this. Yeah.